Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. Thank you for joining me to discuss a critical issue in SBA loan valuations: the impact of losing a key person, often the owner or founder, on a small business's value. Imagine a manufacturing business thriving until its owner, the heart of its operations, suddenly passes away. Within months, its value plummets 70% to liquidation levels. This isn't just a hypothetical. It happens regularly, and it underscores the stakes for lenders, appraisers, and business owners. In closely held businesses, especially in fields like manufacturing, the owner often wears multiple hats: engineer, salesperson, strategist. Their departure can trigger chaos, disrupting cash flow, eroding customer trust, like a ship losing its captain in a storm. This risk raises a big question. Can the business keep generating value, or is it headed for distress? Let's start with why key people matter so much. They bring institutional knowledge, like proprietary production methods. They maintain customer relationships that drive revenue. They manage supply chains and provide leadership that keeps teams motivated. Losing them can take years to recover from, or the business may never recover at all. To assess this risk, I suggest a simple framework. Check what percentage of revenue ties to the owner's relationships. 10% or more is a red flag. See if critical processes are documented or locked in one person's head. Estimate how long it'd take to replace their skills. 6 months for a niche engineer is a problem. And look at management depth. Are others trained to step up? Now let's talk valuation. Appraisals must be based on documented cash flow and viability risks. When a key person is lost, cash flow can tank. Appraisers bump up the discount rate to reflect the key person risk. As cash flow falls and risk increases, intangibles like goodwill vanish, pushing you toward an adjusted net asset approach. Worst case, you're looking at liquidation value, not a going concern. The data backs this up. The SBA's 2023 small business profiles show 20% of small businesses fail in their first year, 50% by year 5, with succession issues as a top culprit. SCOR's 2021 report found only 30% of businesses have a succession plan, leaving most vulnerable. The Census Bureau's Business Dynamics Statistics 2020 confirm many businesses dissolve within a year or two of a founder's death unless strong management is in place. And in 2024, the SBA's Agency Financial Report noted manufacturing businesses face 15% higher loan default rates when succession falters, due to their reliance on owners' technical expertise. Let me share a quick case to bring this home. A 15-employee manufacturing business with $2 million in revenue lost its owner, a mechanical engineer who knew a patented process no one else did, and managed 60% of client relationships. Within 6 months, production dropped 40%, sales fell 45%, and the business posted a $200,000 loss. Its valuation? Down from $1 million as a going concern to $300,000 in liquidation. That's how fast value can evaporate when knowledge and relationships aren't transferable. Now here's the good news. There are ways to mitigate this risk. Businesses can develop succession plans, training successors to take over with minimal disruption to the business. They can document processes in manuals or software. Key person life insurance can bridge financial gaps, and it's common in SBA loans. Cross-training staff during transitions also help. As lenders, you can require these steps in loan applications to protect your portfolio. Key person risk is a make-or-break factor for lenders. A sudden loss can turn a thriving business into a fire sale. You can manage this by requiring succession plans, verifying documentation, and ensuring insurance is in place. By acting proactively, you'll safeguard loans and support small business stability. Thanks for joining us for this episode of the Valuation Desk. When you need clarity, confidence, and credibility, experience makes all the difference. At Highland Global, every appraisal is backed by decades of expertise and thousands of completed reports. We don't just crunch numbers. We provide insight, context, and defensible conclusions that lenders can count on. Whether it's a business acquisition or equipment appraisal, our seasoned approach helps ensure your deal moves forward with precision and trust. For more information on valuation-related topics, be sure to visit our website, highlandglobal.com. Lenders know experience matters most.